Welcome back. Now, according to FNB's property broker survey, sentiment in property shows that 2 out of 3 major commercial property markets are experiencing a shortage in supply. Demand in the industrial and retail property markets is exceeding supply, with Cape Town showing the strongest demand-supply balance overall. Joining me now to delve deeper into these findings is property sector strategist at FNB Commercial Property Finance, John Loos. John, thanks so much for your time today. So right at the top, just walk us through what the survey actually measures. Is it really just the tracking of brokers' sentiment of the commercial property market within different regions in the country?
Yeah, it's the main metros, the 6 major metros: Cape Town, Greater Johannesburg, Tshwane, eThekwini, Nelson Mandela Bay. So it is metro dominated, admittedly, and it measures the 3 major commercial property sectors, that being industrial, office, and retail property. This is the second quarter survey. It took place just before the election, so sentiment might change since then. The politics may have played a role, which we might see in the third quarter. But overall, not a bad picture. Look, overall sales activity for brokers is down on 2 years ago or so, understandably, because interest rates are higher now. But when it comes to market balance, and we get the brokers' perceptions of demand versus supply. What they're saying on a national aggregated basis is that demand exceeds supply in both the industrial market, which has been the strong one for a few years now, and now more recently the retail market too. That's not vacancy rates, though. That's not about the tenant market. That's the investor market. That's looking to buy property versus what's on the market. It's only the office market now that is still very well oversupplied. The other two, not so anymore.
And I want to zoom in on those different commercial property markets. Let's start off with retail. You did say it did turn positive after some time. What is boosting sentiment over there, considering that within the second quarter we did have the political jitters, we still had interest rates at very high levels, and just the macroeconomic environment still quite downbeat?
Well, this is the interesting part. Is I think it's certain regional sentiment that's driving things, because I've just talked about it being on a national average basis. But when you split it up into the major metro regions, what you find is that the Greater Johannesburg region, that's now City of Joburg and Ekurhuleni lumped together, that's still significantly oversupplied. So investor sentiment seemingly not good around this part of the world where I am. But City of Cape Town, demand exceeds supply. That's where it exceeds supply the most, and also to a lesser degree in the eThekwini metro and even in Tshwane. So that's the interesting part. Is it seems to be a regional play. The slightly smaller metros, Joburg, Greater Johannesburg excluded, that's where investor sentiment seems to be good, and not so in Greater Johannesburg. It's a more regional thing, I think, than a cyclical thing at the moment.
All right, let's zoom in on the industrial market, which is also faring well. I mean, no surprise there, as we've seen the rise in e-commerce and the need for warehouses, John. I want to zoom in on the regions there as well. Am I right in assuming that there's an uptick in demand of industrial property within the coastal areas because they're nearer to the ports?
Well, if you look at general vacancy rates, just to go to the tenant market for now, the industrial vacancy rates are generally low, and that's in Gauteng as well as on the coastal regions.
Okay.
Again, when you get to the investors, where do they want to buy? That seems to be on the coastal regions, eThekwini and City of Cape Town, especially having very strong demand exceeds supply. I think it is. It has to do. I've heard varying stories about why demand for space in especially eThekwini metro is so acute at the moment, and one of them is that inefficiencies in the ports in recent years have caused a longer. You have to stockpile your goods often for a longer period of time, and that has partially supported industrial space, but I think it's the key driver around industrial has been more a change in the way we do business, online retail coming to the fore and changing the logistical requirements, and that seems to have boosted demand for space in the industrial market and made it the outperformer in recent years, and therefore investors have gone more for the industrial market, and that seems to be has been a worldwide trend. That a number of years ago it was retail, everything was about retail. That's now somewhere in the middle between office and industrial. The outperformer has been industrial, and that's a lot of it has to do with the change in the way we do retail and do business.
John, what are you hearing on the ground, especially when it comes to eThekwini, considering the infrastructure problems we've had on that front? I mean, there have been many natural disasters hitting that province in particular. Has that not weighed on perception, sentiment?
eThekwini is very interesting. It doesn't seem to have. It is still, well, on the industrial side anyway, there's still a very, very strong demand for industrial property in eThekwini. It's less the case in office space. Look, they do have low vacancy rates than up here in Johannesburg when it comes to office. But certainly it's only in the city of Cape Town where office demand exceeds supply. It's an oversupplied market in eThekwini. And more recently, retail also in eThekwini has started to, where demand has started to exceed supply. So it sort of seems there's a broad, better sentiment in the coastal metros than in Gauteng, being the weak markets. eThekwini is an interesting one because you may, the politics of that region is rather uncertain now. They're into coalition governments at metro level and at provincial level now. So, that can create uncertainties. There's been a lot of floods. There was the unrest a few years ago. There's been a lot of negative events, or quite a few in KZN. But nevertheless, there still seems to be a sort of more interest in coastal regions than in the case of Gauteng.
Considering that we've also seen the office demand-supply dynamics also a bit stronger within the coastal regions, particularly in the city of Cape Town.
Yeah, so semigration, just let me talk about eThekwini and KZN. I think up the north coast has been a sort of to a lesser extent, a semigration destination, and that's boosted that sub-region. So that can be driving investor demand in sort of Durban North Coast way. But the big semigration destination has undoubtedly been Western Cape in general. Not only semigration of skilled labor, but affluent, often retirees taking their purchasing power to that region. And it also seems to have retained its skilled labor and affluence better. So the net skilled and affluent semigration flows has been positive into the Western Cape. That obviously immediately increases demand for residential, and a lot of new residential development in recent years, although it has slowed with interest rates, but it's certainly outperformed in residential developments compared to the rest of the country. That then obviously increases the need for new retail and retail developments. That region has been doing, and I think after a decade or two of better semigration of skills, I think that's starting to see the Western Cape's economy do better as a whole, because skilled labor drives economies, and as does purchasing power. And that then starts to boost property. And I don't think it's just about investors flooding in there from the rest of the country. It's also about an economy that's possibly starting to outperform the others now.
John, thanks so much for taking us through that survey. We appreciate your insights. That was John Loos, who is the property sector strategist at FNB Commercial Property Finance.